ladies and gentlemen. Before the main event, which is on Sunday, the national budget, we keep our focus and our attention on quality earnings that are coming out of the Lal Street. Today is also the last day of the week, as also of a very painful month, January, but as good a time as any to discuss quality earnings coming out of mid-sized companies. Joining us on the show to discuss their quarterly performance is the management of KPIT Technologies. Mr. Sachin, Tikekar, Joint MD and co-founder at KPIT, joins us, along with Ms. Priya, Hardikar, CFO at KPIT's. Both the gent and the lady are a regular on Business Today Television. A very warm welcome to both of you, and Happy New Year. The numbers, as far as the quarterly numbers are concerned, sales rose 9% year on year, but profit slipped a bit, about 6%. The data will come in front of you. Sachinji, with your permission, I'll go with the lady first. Priyaji, namaste, a warm welcome, and a view on how the profit slipped and why, and how much did these change in labor laws by the Government of India caused this modest 6% drop in quarterly profit?
Right, thank you, and very good morning, Shell. Happy to take you through the results for quarter 3. So if you look at our revenue, it is again 22nd consecutive quarter of growth. We have given a quarter-on-quarter performance over last 22 quarters. Now, in terms of profitability, our profit after tax stands at 133 crores, which is after absorbing a one-time wage code impact of 47 crores. So if you remove that impact, then our profit after tax is 180 crores, which is much higher than the previous quarter, and even its ratio, if you look at the profitability ratio, is also then 11.2%, which is comparable with our trend in the previous quarters. So because of this one-time impact, you see that it has given the results of PAT. If you look at our EBITDA numbers, again 20.6, I think we are steady at that range. Little lower than previous quarter, but I think we are steadily into that same range, and we do believe that this range will continue. All of these parameters, because of AI agentic solution and our focus on solutions going forward, has given a good push to our margins. If you look at our revenue per person has significantly improved. That is one of the barometers that we will be tracking and we will be focusing on. And also the fixed price percentages, the fixed price solutions and fixed price projects have improved significantly. So that's about overall results for Q3, if that answers, Shell.
Okay. Yes, ma'am, what we'll do is we'll just get a broad view of what's happened in the quarter gone by from Mr. Tikekar, and then we'll again look at the subsequent 2 or 3 quarters which are in the pipeline. Good morning to you, Sachin, and a very warm welcome. What have clients discussed with you in the quarter gone by? Can you give us some granular feedback of what's happening in the mobility space, where KPIT Technologies is perhaps one of the very well-known leaders globally?
Absolutely. No, thank you for having us, Shail. Happy to walk you through our thought process. So first of all, let me say that the conversations that we have had in the last 3 months are a lot more positive than the conversations that we've been having for the last a year and a half. And the reason behind that, and I'll take you segment wise, which is, first let's talk about passenger cars, which has been significantly impacted over the last year and a half or so. They cut down spend on R&D and overall spend dramatically in 2025. It's gone down to the tune of 20-25%. And in spite of that, I think if you take an average of all the OEMs, their profitability has gone down significantly. Having said that, I think they've been able to sort of cut expenses where the need is, and then they are prioritizing investments in certain areas. So now the conversations from KPIT's perspective are taking a positive turn, and I'll talk about specific domains where we are seeing more focus and added spend. Number one is the digital cockpit and in-cabin experience inside the vehicle. That's where we see investment. Second is navigation on autopilot, which is level 3 on the ADAS scale. Also, we are seeing more spend in cybersecurity naturally as the connected cars become more and more. The threat of cyber attacks is a lot more. So there is a spend there. And after sales and diagnostics. So these are the areas where the spend from our perspective is going up, and we've been getting ready to help the OEMs complete their production programs cheaper, better, and faster. That's what we are reading on the passenger car side. Trucks, it's a cyclical 2025 that they went through, where the overall truck sales went down globally quite a bit. We do believe that this will come back in 2022, especially the second half of 2026, the second half of 2026. The most positive sub-segment for us has been off-highway. Their spend was reasonable in 2025, and it will continue to be going up a little bit in 2026. So that's really what we are hearing from our clients. And what it means is, I think we need to have more balanced growth going forward. We'll continue to focus on passenger cars, but we'll have to pay extra attention to trucks as the markets come back, and also capture the spend that there is from off-highway perspective.
Right, sir. Right. Let's get Priya into the conversation and look at what possibly the fourth quarter and the subsequent first and second quarters of the new financial year look forward to. Priya, you've mentioned that the labor changes were responsible for that one-off 47 crore rupee knockdown on quarterly PAT. If you add that back, it would have gone up substantially, sequentially as well as year on year. Now, with this hurdle out of the way, what is the order pipeline, and how are you navigating with your shareholders in terms of the guidance for the subsequent 2 quarters now?
Right. So our pipeline is sufficient. I think we have already mentioned in our investor update that it is almost $202 million pipeline that we are riding high on. In terms of guidance, we don't give such specific guidance, but all we can at this forum confirm that Q4 will certainly be one of the best quarters in terms of revenue for the current fiscal year. That's what we believe that our Q4 result will reflect upon. In terms of moving forward, as Sachin actually mentioned, that in mid-term we are very optimistic, we are very bullish about how the demand environment is moving forward and how our steps that we are taking in terms of building our technology, reaching out to the markets, whether it is passenger car or focusing on off-highway and commercial, that will start yielding results. And mid-term is where we are very bullish. And I can't give you specifically for few quarters in the next year, but we can definitely say that FY27 will be better than FY26. And in terms of margins, Shell, I think we have continued our steady state streak between 20.5 and 21. That will continue for a while. We are taking all the steps we can to ensure that our efficiency, our utilization is on the top of the performance curve. And we are very bullish about the overall market environment also. And we do believe KPIT is poised well to reap all the benefits from the industry.
Okay. Sachin, this one comes to you. What have the top 5 clients at KPIT been asking in terms of a change in the product profile because of the advent of AI? Have you added more people to your top 5 clients in terms of servicing, or has that number come down?
No, I think it's a great question, Shail. And you cannot have a conversation with any client without AI popping up. And tremendous investments from KPIT's perspective, not only in terms of resources but also in terms of mind share, have gone in when it comes to AI-infused mobility and our deep agents that specialize in specific domains. And the positive thing is we started working with some of our key clients with some AI infused mobility solutions during the course of 2025, and we are seeing some very promising results. We have also realized that the change management that it takes to make a bigger impact is substantial. From the pilot projects, there are tremendous learnings for us as well as for our clients. And as we start 2026, we believe that our ability to create efficiencies for our clients in terms of cutting down the time to market, in terms of reducing the cost of their production program, and also without compromising on quality. I think all of these aspects will start to play out in 2026. So one is to have just general AI, and the second is to have deep agents that are domain specific. And that's where KPIT comes in, because we know our domains. We've been in this area for many years, and that's all that we do. We remain very bullish, even though any transition is painful for companies like us as well as for the OEMs, but it's part of life. And once you go through the initial phases, I think things stabilize and then things start to take off. So we believe that the stabilization phase is just ahead of us now, and hopefully takeoff won't be too far.
Okay. Priya, what is the capex that you're looking to spend in financial year 26-27? Are there new geographies being targeted? Are new campuses being set up? How about attrition and how about hiring?
Right. So I'll take first the investments that you talked about. We will continue our investment mainly into technology and also into off-highway and commercial segments per se. Technology, by that I mean AI-infused mobility solutions, also in cockpit digital solutions products, and basically moving to a technology edge for our solution approach. Now, in terms of investments in R&D, yes, people-centric investment continue. I think we declared that we are building a senior leadership across KPIT. As you all know, that Mr. Sabre is now our COO, and he's also a KMP now. Similarly, we are building a very senior leadership in technology and also in various geographies, whether it is Europe or Asia and US. So that talks about our investments, which will continue moving forward. Now let's talk about how do we see our margin story for 27 even after these investments. I think, as I mentioned earlier, these will continue in the steady state domain. Currency sometimes play a little bit of havoc, but we are confident that our basic efficiencies will be able to support us to continue the profit after tax efficiencies moving forward. Lastly, in terms of hiring, we are now looking at the solution driven approach, whereby we are disassociating the actual employees or team members working on specific projects, and therefore you will see that our even existing results, our revenue per person has gone up and our fixed price project contribution has increased significantly. So that's what we are aiming for. We have now absorbed the Caresoft and other acquired entities people also in the current quarter, and it has remained I think at 12,754 number that today stands. So I think our focus will be building new technologies, driving the client projects to a more solution-driven approach, and building on agentic AI-infused mobility solutions for them. And hiring will continue in small pockets. It will continue in the right pockets, I should say. And we will also be looking at maybe some bit of fresher hiring. But yes, it will be in very specific and niche pockets. If that answers all the questions that you raised.
Right. Sachin, my final question comes to you. Just today, yesterday evening on Wall Street, there's been an announcement that the world's most prolific car maker on the EV space, Tesla, might be moving away from cars and shifting to robotics. Is this a one-off trend that you are hearing from clients, or is there something major afoot in the world of mobility which might be cramping maybe the 5-year horizon of KPIT Tech?
That's a great question. Tesla is a torchbearer when it comes to disruption. And, our sense is, I think it's a natural extension. If you look at many Chinese companies that are also have done a great job with their battery electric vehicles, they are also pouring into flying cars and stuff like that. Tesla will double down on robotics. They will double down on autonomous vehicles. Of course, so that has been their strategy. And if you really see, it is important for them to do that because their market share in Europe has gone down dramatically. Their market share, they've had degrowth in the US, and they have substantial degrowth in China, their top 3 markets. And the whole IP of Tesla has always been proficiency in manufacturing processes, and secondly, in autonomous vehicles in the most efficient manner. So they're going to be using the same technology extension of that in robotics and even in SpaceX for that matter. So it's not a surprise to us that they have taken that step. But to answer your question, that's just Tesla. We don't expect too many others of our OEM clients to follow the direction, except for in the immediate future, except for some of the Chinese, 3 or 4 Chinese OEMs who are actually looking at, a sort of air mobility in some sense, personal air mobility.
Right. On that note, Mr. Tikekar and Priya, we'll call it a day. Thank you for joining us. Here's wishing you a great 2026 ahead, and let's hope the overhang that that AI has on domestic IT moves away, and the sun starts to shine brightly on the Indian software industry. Thank you so much for watching, and here's wishing you all the best for the next 12 months.
Thank you for having us. Always a pleasure.
Thank you, Shail. Always a pleasure. See you next time.
That, ladies and gentlemen, was the top management of KPIT Technologies discussing the way forward, and of course why profit slowed about 6% year on year. That was because of that one-off labor costs changes that were initiated by the Government of India. Thank you for joining us. News continues on Business Television. Please stay tuned.